What's up, guys? I'm here on a Wednesday as opposed to a Monday. I'm actually going to start doing 2 videos a week, so you get the pleasure of seeing this face twice a week. Lucky you. So I'm going to make these videos more conversational, less teachy, and more commentary on financial topics that I find interesting, less formal, guys. So what I wanted to do today was talk more about the government budget, which came out last week, okay? And I made a video on that on Monday, so go check that one out. And I just wanted to expand more about the actual property stuff. So I'm gonna make a video next week in more detail about the 95% mortgage guarantee scheme that Rishi just announced. Really good scheme that's going to help so many people. In that video, guys, I'm going to give you all the details about who's eligible for it, how it works, and how it's going to really affect you if you're looking at or actively going to buy property anytime soon. So look out for that video next Monday, guys. But I just really want to talk about it in general terms today. I think it's a really good scheme. Really happy with what I've seen so far in terms of the outline of it. So as we know already, the Help to Buy and the shared ownership schemes have been around for, I think it's about 9 years now. I think when they were initially announced, the period of time that they were going to be available to the public for was only a few years. And 9 years later, here we are, okay? So this 95% mortgage guarantee scheme is really good because it goes a lot further than the Help to Buy and the shared ownership schemes, which, as they currently are, they're open to new build homes only, okay, and first time buyers. So this new guarantee scheme goes beyond that because the shared ownership and new build schemes are really only open to new build properties and first time buyers. So if you already own a property, you can't use those schemes. So now this new 95% mortgage guarantee scheme goes beyond that. If you already own a home, you can use it, and you don't need to buy new build homes. Why is that important? Well, for me particularly, as you know, I invest in property, and the properties in my portfolio are all new builds. They're all new builds. One thing that I want to expand into, my next properties are existing builds, so older properties, okay? And the reason behind that, let me explain, is because with new builds, you pay a premium, okay? You pay a premium for the price in the same way that, with a car, if it's a brand new car, you pay a premium. If it's a used car, same model, you'll pay less. And property is exactly the same, except the premiums in property are a lot bigger. So when it comes to equity, which is basically the value in your home. So, if I buy a house for 200K and the price goes up to 300K, my equity is the difference between that. It's 100K, and that's the value that I have in the home because it's gone up in price. And there are ways that you can actually force value. So you can buy a house and just wait. The property market over time, as you've seen in so many of my videos, goes up naturally over time. You can actually force the value up much quicker by adding value to the property. So you might refurb it, you might add another room, you might add a new kitchen, a new bathroom, an extension. There's so many ways that you can force value out of a property. It's like getting a toothpaste tube and just squeezing it out. And in this case with property, you're squeezing value out of the property. You can do that artificially. And generally speaking, the best types of properties to do that with are existing properties, older properties, right? Because you can usually negotiate the price down on those a lot easier than you can on new builds. Or you might get an older property that's already in, say, a state of disrepair. So it might need a lot of work, or some work, not necessarily a lot, but it might need, some love. Some properties out there are just like old and tired, right? Some properties have issues with them. So it might be the plumbing system or the electrics or something structural that you can fix, by spending a few £1,000s or maybe even a few £100. But, you might actually be able to force value out of it. But by doing those fixes, you might be able to add 5, 10, 15, 20,000 pounds worth of value to the property. So this new 5% deposit or 95% mortgage guarantee scheme is really useful in helping you to acquire such properties. Obviously, you have to live in the property, so you can't use this scheme for buy-to-lets. However, it's a great position to be in to buy a property to live in and actually add value to it. And you can actually extract that value, even though you're living in it, through remortgaging or when you sell it and move somewhere else, okay? So it's a really good scheme that allows you to acquire these properties much more easily, because at this moment in time, when it comes to residential mortgages, most banks, their appetite, they call it the risk appetite, they're not looking to only take a 5% deposit from buyers right now. You know, without this government scheme in place, banks, I work in a bank, I've worked in banks all my life, they're very much concentrated on risk. So what they ideally want, you know, in general terms, when it comes to somebody buying a house, they want you to put in as much money of your own as possible. They do not want, generally speaking, to lend on 100% of the property price. So if I want to buy a house for £400,000, the bank wants me to put in as much of my own money as possible, and they'll lend me the rest. And the reason why that's important for the bank is because they think in worst case scenario terms. So if we ever got to a point where I wasn't paying my mortgage and the bank had to repossess it, they want to be able to sell the house and recover all the money that they've lent. And the best way of ensuring that they're going to recover all their money is to lend as little as possible compared to the value of the house, okay? So that's bank's perspective when it comes to lending. And with this 95% mortgage guarantee scheme, the way it works, it's really a scheme between the banks and the government when you think about it. So when it comes to it, I, as a purchaser, I'm going to put in 5% of my money. And yes, the bank is going to give me a mortgage for the other 95%. However, in a worst case scenario, that 95% that's been lent by the bank is guaranteed by the government. So there's virtually zero risk to the bank. The government is guaranteeing the money that they put in, okay? And that's really the crux of it. So it's a great scheme for banks and it's a great scheme for buyers. It opens up the pool in terms of what we're allowed to buy as buyers. And I think it's going to be very successful, and I encourage loads of people to jump on it. Watch my video coming up on Monday when I go into the scheme in more detail, all of the details about it, how it works, what it means for you. I hope you found this video useful. Like, share, subscribe, comment, all of that, and I'll see you guys on Monday.